Hi guys, welcome to today's episode. Once again, my name is Betty Mklanga, the manager at Deriv Trading Academy. Before we continue, if you're watching this video from YouTube, please like this video and subscribe to the channel and click on that notification button. Thank you guys. Now in today's episode, we are going to take a deeper look at candlesticks and why they are so important when it comes to trading. Okay, let's take a look. All right. Just like you and I, candlesticks have different body sizes. And when it comes to trading, it is very important to check out the bodies of candlesticks and understand the psychology behind it. Okay, here are the candlesticks. Okay, I know that someone is asking, what is a candlestick? In simpler terms, according to me, I can say that a candlestick is a visual representation of what is going on in the market. Just by looking at a candlestick, you get information about the opening price. Okay, the highest price reached, this one here, the highest price reached, the lowest price reached, this one here, and the closing price of that particular instrument on that particular time frame. This closing here, this closing price here. Okay. Candlesticks are very flexible. They can be used alone to make a trade decision or in combination with technical analysis tools such as the moving averages and the momentum oscillators. I normally don't use those, but it all depends on the strategy that you are using. Some people find the moving averages and the momentum and all those other kinds of technical tools, but I don't. You just need to do whatever that works for you as a trader. Okay, I know whatever that I'm going to teach you here, you might as well follow my footsteps, but then as you grow older and as you grow an understanding of trading, you will be able to make your own trading strategy, and you'll be able to make your own rules, of which maybe at the beginning you will keep on breaking them. Okay. All right. If you've been following me, if you are on my Telegram channel, you should have noticed that I use candlesticks with support and resistance, and as well with trend lines. Okay. The human behavior in relation to money is always dominated by fear, fear of missing out. Like I always hear people when I've posted a signal and only to find that maybe they were asleep or they were busy with something else and could not get that signal. They always mad, always angry, regret such things, that fear of missing out. And some other times you just feel like, okay, this market, I think it will go up. But then before you can even wait for it to retest, you don't even wait for it. You just get in. You get in before the confirmation. That's fear of missing out. And then another factor is being greedy. Last time your lot size was maybe on the minimum, and you profited from that trade. And then right now you see that, you know what? This guy gave me a signal yesterday and I made a profit on that. And today he also gave me this signal. Now I think it's time I add more position, or I just increase my lot size. That's being greedy. Wanting to be rich now. Remember, ladies and gents, trading is not a quick money-making machine. You need to study. You need to understand. You need to have discipline. You need to work hard. A lot of dedication. This thing I'm doing, it was never done. I never did it overnight. I had to go. I used to be like a beginner, who wants to follow the market everywhere it goes. When it goes up, I want to go up. When it goes down, I want to go down. Most of the time, that's where we lose money. Let's say I get in a trade, and then only to find that on a -$2 US loss, then I think, you know what, I made a mistake. Let me just close with this loss, and then I'll sell, doing opposite to what you did, only to find the market go another direction. You need to fix that discipline. Okay. Follow your strategy. Follow your rules. I know that following your rules, it's hard. It's really hard. But then, if you manage to follow your rules, then I think everything will be much better. Okay. Now, we're talking about greedy, and also human behavior in relation to money is also dominated by hope. After making an execution, after executing a trade, now you just right there, even though like there are signs of a reversal, you still hope that, you know what, my TP is right above it. Surely my TP will be hit. Let me hold on. That's being hopeful. Sometimes hope is a good thing, but then in some cases it is not, especially if you only focus on hoping that this trade will profit, even though when all the signs are there that it is going opposite to your prediction, but you're still holding on up until you lose all your money, you lose all your capital. Okay. Now, candlesticks analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other. Candlesticks provide more useful information than bar charts. Using candlesticks is a win-win situation because you get all the trading signals that bar chart generate with the added clarity and additional signals generated by candlesticks. Candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day. They can move the market whenever they want. They can take your money easily if you do not understand the game. I normally tell my people that it is very, very useful or important for you guys to follow a trend, follow the market trend. If it is a downtrend, stop looking for a buying opportunity in a downtrend market. Look for a selling opportunity. If it is an uptrend, stop looking for a selling opportunity. Look for buying opportunity. That way, you might improve your profit. Okay. Always know that. Now, let us take a look at these candlesticks. This one, as you can see, the green candlestick, this green candlestick here, okay, this one here represents a bullish candlestick. Why is it considered to be a bullish candlestick? Without looking at the colors and so on, you need to take a look at the opening price. Where is your opening price? Here is your opening price. Okay, here is your opening price. Where is your closing price? Here is your closing price. So whenever you see a closing price above your opening price, that is your bullish market. Okay, meaning the market was increasing or the market was going up. Okay, all right. The red candlestick chart here, this red candlestick chart here represents a bearish candlestick, meaning the market was decreasing on this particular time frame. I hope we already know what a time frame is. Okay, so whatever time frame you are on, you should just know that whatever that time frame you are on, then that candlestick there is for that particular time frame. So with this red candlestick here, now where's our open? Remember guys, let's say this one, the green candlestick opened here and closed there. What normally happens is the following day when it opens, it will open where it closed yesterday or the previous time frame. Okay, then from there, this was the new opening price. And where did it close? It closed below that opening price. Okay, so with that being said, that means the market was decreasing. It is said to be bearish candlestick. Okay, all right. So, okay, now if the closing price is above the opening price, we can say that the candlestick is bullish, which means that the market was rising during that period of time. If the closing price is below the opening price, like this one, we can say that the candlestick is bearish, which indicates that the market was falling during that session. The filled part of the candlestick is called the real body, this part here, from here to here. So normally, what is a real body? A real body is this portion from the opening price and the closing price. Opening price and the closing price. That area or that filled part is called the real body. And remember, whatever that I'm telling you, it has an effect on your decision making. You need to consider all this. You need to consider the length of the body, and some other times the shadow, of which I will show you now. Okay, now the thin lines poking above and below the body are called the shadows. This part here are called the shadows. This part here are called the shadows, and the top of the upper shadow is the highest price reached. This point here is our highest price reached on that day or on that particular time frame. And even this one, this is the lowest price reached on that particular time frame. Okay. All right. I hope you understand. Okay, let's go to our next slide. Our next slide, here we are, candlestick body sizes. Just like I've mentioned at the beginning of this session that candlesticks have different body sizes. Okay. Long bodies, like this one, long bodies, these long bodies, okay, refer to strong buying or selling pressure. Okay, refers to strong buying or selling pressure. And I still remember one of our Sunday's live stream session, someone asked, you keep on talking about pressure. How do we determine the selling or buying pressure? My answer was that by looking at the body of a candlestick or of a previous candlestick. If the body is long, it means that there was a high pressure. If the body was short, like this one, that means the pressure was low. Okay. All right. Now, if there is a candlestick in which the closing price is above the opening price with a long body, this indicates that the buyers were stronger and they have taken control of the market during that period of time. Okay, just like this one. No, I mean, just like this one. As they say that if the candlestick is, if there is a candlestick in which the closing price is above, here is your closing price, is above the opening price with a long body, there is a long body there. This indicates that the buyers were stronger and they have taken control of the market during that period of time. All right. Now, if there is a candlestick in which the closing price is below the opening price with a long body, this means that the selling pressure controlled the market during this chosen time frame. As you can see, our closing price was below our opening price there. Okay. Now, what about these short candlesticks, short and small candlesticks? Now, short and small bodies indicates a little buying or selling activity. That means on this one, there was a very, very little buying or selling activities. Okay. Now let us go to our probable last slide for this session. Okay, here we are. The candlesticks shadows. As you know that we also spoke about the shadows. If you still remember, we say that from here to here, this is our upper shadow. This is our upper shadow. Even though it is small right here and there, this is still our shadow. Including this one is our lower shadow, our lower shadow. Okay. Now, the upper and lower shadows give us important information about the trading session. The upper shadows signify the session high. The lower shadows signify the session low. Candlesticks with long shadows, like these two, shows that trading action occurred well past the opening price and the closing price. Now, candlesticks with short shadows, okay, indicates that most of the trading action was confined near the opening price and the closing price. If a candlestick has a longer upper shadow, just like this one right here, and short lower shadow, this means that buyers flexed their muscles and bid price higher. But for one reason or another, sellers came in and drove price back down to end the session back near its opening price. Just like here, it opened here, and then this were the bulls here pushing it up. Then, after reaching this point, our highest point or our highest price reached here, the sellers came in and pushed it back up until it closed here on that particular time frame. Okay. If a candlestick has a long lower shadow, just like this one, long lower shadow and short upper shadow, this means that sellers flashed their washboard apps and forced price lower. But for one reason or another, buyers came in and dropped price back up to end the session back near its opening price, just like here. Here where the sellers were in control, but then after some time, the bulls came in and pushed it back up to end up closing above opening price, but not far, Okay. All right. As we know, normally this candlestick here, we normally call it a hammer. This is a candlestick pattern actually, but then we're gonna talk about it some other day. We're gonna talk about candlestick patterns some other day. I don't know when. But then yeah. So yeah, we're gonna drop videos like this every Wednesday. Every Wednesday at 7 p.m. Yeah, at 7 p.m. we're going to drop such educational videos so that we can all understand, because the reason a Deriv Trading Academy exists is to help those who struggles with trading. It's very difficult to love something, but then at the end of the day, you see like it does not love you back. So I just made the Deriv Trading Academy exist for those reasons, to help. If ever you are interested in our free synthetic indices signals, feel free to subscribe to our Telegram channel via the link on the description. You can ask anything, you can comment. Okay, I'm happy to help. Now, that's it for today. Our live stream session have come to an end. Thank you guys. Do not forget to like this video, subscribe to the channel, as we will continue to drop hottest videos just like this one, very educational. Thank you. I can say good night whenever you be sleeping. Sharp.